Hello and welcome. Today is Thursday, second day of November 2017. Welcome. I'm going to try to go over many different, what I consider broad markets, and Bitcoin most certainly is. I'm going to start with silver within this video. Everything you do is within your own risk and own reward. And every time Bitcoin has higher prices, I consider silver at all-time lows. So therefore, about 26 hours ago when I made the order for silver, I can't remember the price of on US dollars. I remember how much it cost me, and I got 42.15 ounces for 0.1278 BTC as a measure of turning Bitcoin into physical silver, which will be in my possession in about 21 hours or so. I know usually what time it will come. And that's just an amazing thing to be able to do, is to turn Bitcoin into this physical commodity, something in chart action that has been doing this sideways mechanism. How long it's going to continue to do such, I really don't know. I realize that the longer that it stays at these subpar prices, anything lower, well, it doesn't matter with the number, 15, 14, you keep going lower, it's a better deal each time as far as I'm concerned for the physical silver. But even on the upside, we'll have to use a longer term view for this because I'm on the daily chart, so let's expand it to the weekly chart. And choppy is the best way of explaining it. It's had this good up run, but its correction has been deep and long, with, of course, this flash move earlier this year. Overall, it's been stuck in this sideways consolidation, which occurred from this breakdown just a month or so before Halloween of last year. So about 13 months of the sideways range, mainly between the low 16s to the high 17s, and earlier on had a nice little pierce of 50 cents above 18, and for a very short period above 18 in here. And I'll have to expand it again. We'll go to the monthly chart, and we can almost call this a little crypto-like, in that the gains happen a lot faster than the losses do. This bottom was October 2008. So that's point A. This top is the end of April 2011. That's roughly a little over 2.5 years from point A to point B. As of now, I'm going to say why there's three different C's in here. End of April 2011, we're now in November 2016, so 17 rather, so 6.5 years. And it has only given back about 2/3 of its gains to this point, or approximately, within this move. Now, why do I have three different C's? Well, the first one is because this is the bottom. Two, because a significant of time in here, and this was a very key bottom, but it is higher than in here. And C is whenever it starts the breakout pattern because of this extreme long consolidation pattern. So when we're looking at the points, maybe we go point A, because it pretty much rallied immediately, that's the whole start of the run, to point B. And let's just assume it doesn't break this low. So this will be point C, which is the low. And then point D will be whenever this breakout actually starts because of a long sideways congestion period above the low. Now on to gold, and because Bitcoin got above 7,000, that meant the Bitcoin to gold ratio was in and around 6-1. Back in here when price action was about the same, the approximate Bitcoin ratio would have been about 1 in 10. So the Bitcoin has outperformed gold in this time frame 60 times over. Interesting to say the least. How much higher this number will go? Well, this market's only going sideways, so it's all Bitcoin dependent on this ratio. But if you are a buyer in gold, like I am with silver, you can use Bitcoins to buy gold as well. And now if you have a single Bitcoin, you're going to get around 6 ounces of physical gold. Will that number climb to 10 or 15? Well, if Bitcoin keeps its upward trend and this market stays in this sideways manner, even if it rises up to previous level, what's the big deal if this goes up to, say, 1700 when Bitcoin explodes in its massive terms that it does? Because for gold to go back into this range, it would need to go up about 40 or so percent, and that's child's play in cryptocurrency land. And here is the Bitcoin chart on the daily time frame. And within a trendline analysis, well, we've hit the upwards part of this, and every chart has been logarithmic fashion scaling. This one, no exception, has hit that level. When it retraced from this point of view in here, it did so, and it took a few days before it originally fell through. And its decline was from about 3,000 down to about 2,000, below 2,000. So it lost more than 33%. This one here had a small original price correction going down from 4,500 to over 3,500. That's a loss of maybe about 20%, maybe a little less, but around that area. And then it came back to this trend and immediately fell over. It went from 5,000 to 3,000. That was a significant loss of about 40%. As it stands now, a move to 5,000 would be about 33% from its current high. If I take a trend line and try to draw it amongst those two lows that I see, I really can't do it within the same rate of ascent. But as it lies, we can see that that line currently is pretty much around 4,000 or so right now. So if it's had the same type of deep correction, well, this is what chart analysis is telling me. It's definitely a live play. And we're looking at a daily chart. I can take this into a little longer term frame, little bit of a longer term time frame. Not so much, there's only so much Bitcoin data. And this is the 3-day time frame, as each one of these periods represents 3 days worth of trading. So it's about a half a week almost, 3/7 of 1 week to be exact. And on each level of the highs, it has done it every single time. From the 640 level anyway. In here. The move goes from above the 18 average of highs within the band, below it. Here. Now this is where it barely went below it, so this is why technically speaking I'm right, but it's the only one that barely breached below. Well above the 18 average of highs, breaches below. Well above the 18 average of highs, breaches below. Well above, breach below. Current market phase is well above. The exact levels for the 18 average of lows currently is set in at 49.65, with 56.10 being the 18 average of highs. These are front weighted. And for those that like mathematics, how this is calculated, it takes its current period and it multiplies it by 18. It takes the previous period, it multiplies it by 17, and then so on and so forth for each one. And then it takes the sum of these numbers on the sum of numbers 1 through 18 to get a front-weighted average. Okay, so for myself, I probably should have done more selling than I have, but so be it. The way I look at it is if this thing goes higher and I'm wrong, because I think it will eventually sell off, then um, I'll have more Bitcoin than I probably should have because I've only bought a few amount of US dollar tethers and other alternate coins right now. And if it goes down, and I should expect, like I state, to make a move to this band, which is rising, so it should take some time to get there, maybe 4 or 5 periods, which would be about 3 weeks, maybe 2 to 3 weeks, and then go below it, maybe quickly thereafter. Which is interesting with the SegWit coming up in about 2 weeks. But throwing that aside, if it does go lower, I'll be like, okay, I could have sold more, but I will most likely be accumulating higher amounts of Bitcoins with alternate coins going up. But we'll see how this market plays through. The trendline analysis should state, well, the one I'm looking at is the one from in here. But now that I look at that, let's try to see if I can connect these pierces. I can only connect these two lines, and if I connect it within this, I really don't like to do that because I want to connect it really much near the highs. Next up, let's look at Ethereum in US dollars, which has been going sideways, so it's unlike Bitcoin, it's just holding in there. How long can these things go sideways for? Well, the last time on this time frame, this is a 3-day chart again, it did so for only about a year and change, a little more. So far, it's been in this sideways consolidation for about a half a year so far. Very tight range, but so is the last one on several occasions, although this one is consistent and it's support and resistance. And when we look at this right now, it is just stuck right now in the 18 average. I just find this the most interesting chart. Because Bitcoin has been soaring, Ethereum is in a major downtrend priced in Bitcoin, as it's been in this move going significantly lower, losing about 3 times its value as Bitcoin has tripled in price or such in that area. However, when Ethereum had its 2 major rallies against the US dollar, it just crushed Bitcoin because against the US dollar, it did better. But in 2016, this goes from 002 to better than single 02. It basically went up 10 times. And here it goes from single 012 to dot 15, so better than 10 times with each one of these 2 previous rallies against Bitcoin, better against the dollar. If, of course, Bitcoin prices do lag, you could probably expect a little bit of a rally within this chart, as on the daily time frame, Ethereum is just going in a sideways range. At least it is until it's not. Let's move on next to the stock market, and I'm going to look at the Dow Jones Industrial Average on the daily chart. I'm not a big fan of the gaps significantly higher and lower because it's them saying they closed the market, but usually when it's closed, it's closed. Like, for example, say you go to any type of brick and mortar vendor of some sort and you ask them how much sales they got after they closed the shop last night around 4 o'clock or 8 p.m. or whenever they closed. So they opened it this morning at 6 o'clock or 8 o'clock, whatever. We didn't sell anything. We were closed. Yeah, okay. How many shares were sold when you were closed? Now, I've very rarely traded much within the market, so I don't know how easy it is to access the markets after hours. But anyway, it's been in an uptrend. It's also at the area I've been talking about, which is somewhere around here. I think it's around 23.7 area, where I calculated a 161 point upside Fibonacci, which we'll see on a more longer term time frame. I suppose we could draw a trend line, and I got a trend line up here, and I drew them earlier, so it's all long-term analysis. But it did break this one to the upside, and it has kept going higher. Now, this is priced against fiat currencies, and we've seen how things like Bitcoin and even Ethereum have been soaring against such. Of course, gold and silver going sideways after decent gains earlier, but let's take a look at this on a more longer term time frame. This is a daily. Let's head around to the weekly. And I got another trend line as well. This is very long term stuff because I'm going to keep on going and going until I'm out of data. But of course, this thing on the weekly chart has just kept on going higher. Since it has broke this more shorter term trend line, I decided to not manually dry in. But of course, the uptrend in full tat. As far as volume's concerned, I don't know what to say about this, if it's just an irregularity of some sort, but it probably is. Let's move on to the next chart, which is the monthly time frame. And within such, this now trend line becomes clear. It has connected or been close to, a little above, a little below within this level. And then after a sideways consolidation for a couple of years, it has now been in, of course, this big uptrend. So this level right now is at about under 25,000 as it is. So just if my simple math, which is based on this high and this low, well, it would work out to 23.7-ish area, 23.8. But if it does go up to this trend line, that would just be a small pierce above that handle. But I'm going to look at this even more long term because I got this trend line in which it obviously broke, which is a hair below this. It resisted here and it broke it above in here. Let's take a look at the quarterly chart. And this is the data they got. I do have data going back a lot longer ago. At least I have access to it. I know where to get it. I also have access of silver data older as well. So I'll show a nice silver chart more towards the end of the year in 2 months from now. But, and maybe even the Dow as well, because I got data going back to 1928. But this trend line in here, something to look out for. If there is some sort of extreme hyperinflation, now I can only imagine how high this number would be today. And I suppose if I wanted to, I could mathematically calculate it, but that would be a pretty big number. But let's just throw that one aside. We can see a little more clearly a break of this trend line, which shows in here. We had support, we had a little bit of short term here, who cares about that, but the big support was in here. Failed move, fast move to the upside. The failed move was that big economic crash, as they call it. The Great Recession. I've heard former past President Barack Obama say in the past. And well, the Great Recovery after that, Federal Reserve, I mean, I would say printing fiat currency, but how much did they print? A lot of it was through transferring, and not even that of a blockchain either, no. But they apparently created a whole bunch, and they've pumped this market up. At least I've seen such, or that's how I've been viewing this over the last little while. Now, in a situation, if there were to be any type of extreme hyperinflation, that's unthinkable, that has happened in other places in the past, where over a period of time things go up like double, triple, 10 times, 100 times, 1,000 times, and boom, the dollar's dead. Sort of like what happened in Germany about a century ago, less than that. Also currently happening in Venezuela, Zimbabwe in the previous decade. If something like that happens, there's a good chance this could even skyrocket. Maybe not too much, but enough where you could see this maybe go to 1 million. I mean, Bitcoin's probably going to be 100 million by then, maybe, because that would totally be the end. But that might not happen. Who knows? It's happened in the past. Here we have the US dollar index. This is what all these things like gold and silver and Dow Jones and any stock you would find within the New York Stock Exchange and such are NASDAQ or whichever is priced in US dollars. And this is compared to other fiat currencies, which has practically been choppy for its entire duration. And its current stance, it's had a nice little rally. Small gain, but oftentimes when I see toppy markets, one of the things I look for after a beautiful gain is its original correction, and the 18 average does a very good purpose in telling me that that's what's been going on. So there we are, telling me such. And then a little lift off, noticeably higher, but you know what? That's about as small as I'd be looking for on a break above this resistance, and how it hasn't been holding this level. That usually how I would see a story or a chart like this go on. Maybe it can continue, and the key word here is maybe, a little bit, may get up to maybe the declining 18 average of highs, so possibly quickly get up to 98 or gradually get up to 96, and then start to roll over, where you would then have a test of support in the mid 80s. From there, that's what I can tell amongst the situation. However, maybe other fiat currencies will do worse than the US fiat currency, because it's a race against the best of the best, or in some cases, some might see it the worst of the worst. With that being said, if this is just a failed breakdown in here, after all, it's supposed to stop here, going down that is. So it's at a significant leg lower. Therefore, the market indications are telling you that this thing is probably going to be rolling over. The 18 average of bands has given us the indication now. So the setup is changing bearishly. When you get a nice new setup of some sort like we have here, and it doesn't occur, this thing is going to make it to 120. It's the underdog to occur. The favorite is the setup will play through. This will go bearish. And this is a 2-month time frame. So this could take 2-3 periods to get up to this 18 average. So that's a half a year. And then a move down here could easily take like an additional like 6 or 7. So that's an additional year and change that it could take to get to those levels. When we look at this on the daily chart, 96 to 98 is that level I was talking about that would match up within that 18 average high area. And it's got a nice little bullish pattern. Quite frankly, this type of area is where I would think a break of this resistance. This is short-term resistance in here. It's already broken a head and shoulders on the inverted side pattern. That was this big candle in here. The resistance established in August is retested as we entered the month of October. And of course, this big green candle is the breakout to such. From that big candle, it has had about 5 periods just going sideways without much of a downward correction. Market correcting through time. It's getting very close now for this front-weighted 18 average of highs to meet up with it, thus being a successful correction. And you would think that a breakout of this resistance is going to have a better leg higher than this. So you would think the favorite of the moves is that it's going to, again, come into between 96 to 98, where I would guess there's a heavy chance it's going to find resistance. And if it doesn't, it's already signified, it's already yelled to the world, hey guys, dollar index, yeah, we're breaking out, we're giving you notification of what we're doing. We haven't done it yet, but we're doing it. Okay, go ahead now, DXY, do what you say you're going to do. And if they do, they do. If they make their move, the move is over, the play is done. But if it's unable to really get much above this, and you start to see it falling and staying below the neckline support of around 94, then I'll be talking and it will be easy to see that the failed breakout is got a good chance of coming into play, especially now within this daily chart when the 18 average of lows, which is rising, is now moving up to the neckline. So it would not only break the neckline if it retraces that, it would also break down below the 18 average of lows without any further acceleration after the statement day of moving and breaking the trend and completing the inverted head and shoulders pattern. Let's move on next to crude oil, something I probably haven't shown in many millions of seconds. 20, 30, 40 million seconds ago was probably the last time I shown the crude oil chart, well before this time frame in here. But it's been in an uptrend since the summer lows down below 40. I guess this explains why gas prices for the pumps have been steadily increasing upwards in this upward trend. And now we'll move it on to the quarterly chart. And I can remember going to the United States and here, whether it be the state of Florida or the state of New York, and being amazed at seeing gas price signs showing about $1 when I was used to seeing around 50 cents on our end. Of course, we pay per liter, you go per gallon. Nowadays, it's about over $1.10 per liter. And it's different per day and amongst your geographical location in Canada as well. Especially even a difference of 20-minute, 30-minute drive. I have seen a 7% difference in prices. And then an hour drive, I've seen over 10%. It's really, really interesting. And it's consistent that way, where the city of Toronto is always going to be, it's always been like 10% more than some smaller areas, of course, that I'm used to. However, overall, this trend, which throughout the 1980s into the new millennium, basically stayed in a range of about 10 to about, we'll say 35. Mainly, though, trading in the teens. Nice little rally, which actually started from in here to this top. So are we developing this range again in here? It's been in place for quite some time. It's in a situation after this down move where it's correcting within this 18 average. We've seen how good of a year it's been, so the 18 average of highs, previous resistance is in at 61. That will be an interesting, hey, now what situation and now what meaning? Let's assume it makes a move up there. Okay, you were in a downtrend, you're in a correctionary phase. See, the bears can come in now and really drive this down if they want. But any moves up to this level, hey, there's no problem with going back a little, but this 18 average would start to go sideways, and that's why that becomes a must-hold area in that attempt to revert the trend. And breaking above this resistance, I would have to think a move upwards to 80 to 100, probably closer to even 100, would be a key area of resistance. And just for fun, I want to just get a random code. I'm going to do a search for 2 letters for stocks. We'll do letter K, then letter E, and see what comes up. And Kimball Electronics, code KE on the NASDAQ, is getting hammered today, down 8.24%. But you know, it really, really makes me laugh. Hee hee hee. I don't know, I shouldn't have done that. But when I see 8.2% of a down day with this kind of volatility, that is just crazy. Because in the crypto space, especially with these altcoins, a day like, and these normal days are 8%. This would be 30 something, 40% down. That's just crazy, crazy, if not 50% down when you see moves like this. However, on its weekly chart, I mean, I don't know why it went down so much, if it was bad news or something. It came back down to the 18 average of lows in the last spot and where it came from. As a speculating person, that I think oftentimes, you know, sometimes this is just where I like to buy. but I'm not playing the NASDAQ game. But this is my kind of style as far as my kind of entry. Now, I do realize that if you do buy here and this thing rolls over, you're talking about some lower prices. But hey, it's at the 18 average of lows right now. And in here, it's done well in the past. Now, as far as its volatile moves is concerned, well, it's a stock market. It's done better than double since 2016. So, hey, double, how you doing? But now that I'm past the 30-minute mark, I've shown a whole bunch of codes, including this random one I had no plan on showing. In fact, I, for the first time, just heard about Kimball Electronics Incorporated. I'm sure a lot of you for the first time as well. Thank you for tuning in to this afternoon's video, at least recorded on the afternoon for my part. And have yourself a great day. Bye-bye.